Hey financial warriors, welcome to the show. And we had the CPI inflation numbers come out this morning from the Bureau of Labor Statistics with inflation at just 0.1% for the month of March, which takes the annual inflation rate for the past 12 months down to 5%. Remember that inflation rate was up at 9.1% last May. But this reduction in the rate of inflation may be short-lived. We'll tell you why that is a little bit later in the video. But first of all, I'm all about giving you value. And if you want up to 12 free stocks for opening a new account and depositing any amount of money with the zero commission stock brokerage app Webull, do click my link below. The minimum value for this deal is $34. That's the absolute minimum amount you can get in free stocks. And if you luck out and you get the largest number of stocks at the highest values, it could be valued at up to $30,000. Luck of the draw what you get, link is below. So what has led to this decrease in the rate of inflation? Well, if you look at the chart on page 2 of the report, the biggest decrease, so the biggest deflation in prices in March was in energy commodities. So you're talking gasoline, fuel oil, etc. Energy overall was down 3.5%. For the month of March, and actually is down 6.4% for the past 12 months. Now, the price of shelter, i.e. rent, was the biggest contributor to March inflation figures, canceling out some of the decrease from lower fuel prices. But that isn't the whole story, because remember, we are looking at inflation figures for March. And what happened in early April? Yes, OPEC Plus, the cartel that controls 60% of the world's oil, announced a surprise cut of over 1 million barrels of oil per day, with Saudi Arabia leading the effort, cutting its oil output by 500,000 barrels per day, and other countries following suit with slightly smaller amounts. Now, if you don't know, a production cut leads to an increase in price because there are now less barrels of oil on the market that have to be fought over by the same number of buyers, and thus they become willing to pay more to get their hands on the scarce resource. So oil went from a 12-month low of $64 on March 20th, shooting up past $80 per barrel on April 3rd, the day after the announcement. Saudi Arabia wants oil above $80 per barrel to raise capital. Their economy is highly dependent on oil. They've got a huge partly government-owned oil company, Saudi Aramco, whereas the US would benefit from oil being more around $65 per barrel. At this level, it's expensive enough that the US producers can make a profit, but it's still cheap enough that it doesn't influence too much the cost of getting goods to market or high gas prices at the pump for consumers. So anyway, for April, this means that the decrease in gas prices and the influence on inflation from that has been completely wiped out by this rise in oil prices because of this massive cut of 1 million barrels per day. So when we get the April figures halfway through May, we're probably going to see energy price inflation, which will contribute to a higher overall inflation figure for the past 12 months. And I'm guessing that will be higher than 5%, unless a miracle happens and the US opens up more production here, or OPEC Plus has a change of heart, which I don't think they will. So a good inflation report, but the numbers are already out of date. Wall Street knows that. Stocks initially rallied, but then the rally sort of tapered off. And the Fed will most probably still raise interest rates by another 25 basis points in May. So please leave your comments below, guys. What do you think about all of this? Don't forget to get up to 12 free stocks when you open a new account and deposit any amount of money with the brokerage app Webull. Link for that is below. Please subscribe to the channel if you're new, and we'll see you next time. Bye-bye.